I've been trading in the market since 1986. Back in the early 80s in Ireland, I don't know if you've seen the film The Commitments, or another film, The Snapper, how poor and derelict Dublin was, but certainly having left school in 1981, there was very little opportunity to go to college, so I joined the bank in 1982 and did my degree at night time. In 1986, I joined the dealing room and ran after the crash in 1987. I started trading the sterling interest rate book, and I ran the off-balance sheet desk there until I left in 1994. Fantastic time, and one thing I've learned over the years, if you're trying to learn about trading, you need to try and get a mentor or somebody you can sit with. I was lucky enough to go over to a guy called in Chemical Bank in London, another bank that doesn't exist, and I sat beside the sterling FRA trader for a week, and it was the best week's lesson I've ever had. And I've always had this idea that whoever you deal with, going forward from then, always try and meet them, whether it's your broker or banks or whatever, your customer. It makes a big difference than just having the facial or the telephone conversation. So it makes it much easier. Then basically at the end of 1993, I tried to set up a hedge fund in BNP, and it was approved, and then at the last minute the bank said no, so I got approached by Ulster Bank, and I went working to run their off-balance sheet desk for which I did, but I knew after 1 or 2 days I was there that I made a mistake, because I was being questioned on all my limits, and BNP had none of that. You could just basically had a free reign once you stayed within limits. So I basically stayed there for 10 months, and as you can see on the right hand of the screen there is a place called Finex. It was part of the New York Cotton Exchange, which is a trading room for traders. Fantastic idea. The Irish government gave you a tax break of £62,500, which is roughly €75,000, provided you put €75,000 in yourself. So there you are with a company of 150,000. The chap sitting beside me on the left there is Rory O'Callaghan, and the two of us set up a company called Celtex. So we had 300,000 in our trading account, which 150 came from the government and 150 was our own. And off we were on the floor. As you can see by the state of the old screens, it was quite antiquated, but it was the best 12 years I've had of trading. It was just a fantastic environment. All these mad traders from all over the world coming into a floor. The floor we were in Dublin had no windows, so we didn't know whether it was bright, raining, sun, or whatever outside, and it was an incredible experience. Unfortunately, Finex closed down in 2007, and it's very hard. I'm sure a lot of you that I'm talking to trade at home on your own and can be lonely existence at times. So I've decided to get out of the house, and I went into a Regis office for a few years. That was quite lonely as well, because a lot of the people in the Regis office didn't speak English, and there was no other fellow traders in the place I was in. So that was tough, because you can be in a room on your own if you've got a big position. It can be quite trying. So in 2010, a company called IAFT in Dublin, who were teaching people to trade, asked me would I go and become a lecturer. So I did that for 3 years, or 3.5 years, and out of that, TraderNoble.com was born. Trader Noble is basically, the reason I set it up was the people I traded, when they finished the course, they didn't have anybody to give them mentoring going forward. So I started writing this economic commentary. It was quite basic in the beginning. It's now mushroomed into what it is, and I have a platinum service now with updated emails during the day. So to be honest, I don't get a break really, and this thing is done every day, apart from a couple of bank holidays. But no matter where you are in the world, you have to do it. So, and then, which is very important, I think, for at a trading environment, you've got to have something outside of trading to keep your mind. And my background, or my pastime, is touch rugby. I'm lucky enough to play for one of the Irish overage teams. And in 2015, we were in the World Cup in Australia, where we got bronze medal, and it was a fantastic experience. So next year we have the European Championships are in Nottingham, and I'm hoping to get on the over 45. So I'm obviously giving a few years away, but that's what keeps me going. We do that 3 or 4 days a week. So you need that for your mindset as well as everything else. So sorry to go on. Sorry, Simon, that was my background.
That's fantastic. You're busy, sports and trading. You're very busy. I wonder, just on a technical point, would it be possible for you to expand the screen? Just to the bottom right, there's a little symbol that you're quite close to. It just looks like a presentation screen in the orange bit. Just left of the plus and minus. So go left, go left. Now, just there, if you click that, we should see, there we are, we should see the whole screen. Is that okay?
That's perfect, yeah, no problem. Okay, guys, that's basically just a background so you get to know who I am. I've, as I said, as you can see from the previous chart, I've over 30 years of trading, of which I've been trading on my own since 1995. So we've had some hairy times and some good times. So it basically gives you an idea of what we're doing. And as you know, there's no harder way than doing. You've got a blank sheet and you've got to go off trading on your own. Okay, so enough about myself. Now we're going to give you about the S&P. Yes, what can we say about the S&P? I have been buyer of dips for this market for the last 6 or 7 years. Just keep buying on dips. I just find, even though I am as bearish as hell with the US economy, I think the US economy is going to slow down. I think we're already seeing the contraction in money supply, etc., since we've had the 3 rate hikes. So at the moment, the current trading price is roughly 2,500. The historic PE for the S&P since 1945 has been 17, and we're currently trading 25, 26, and obviously that is not sustainable. But that doesn't mean that the market's going to go lower. The fair value for the S&P is 1720. So I have not, in my lifetime, seen this with the US market, seen such a discrepancy between the current rate and the fair value rate. The standard deviation, as you can see there, is 2240, which we've been above since Trump got elected in November 2016. And third standard deviation is 2792. And believe it or not, the fourth standard deviation is 3344. Now, I'm not going to say that we're going to trade to these levels, but I'm trying to do a comparison as to why this S&P is at these such levels, and are we going to have a melt-up? Personally, I think we're going to run into trouble for the next 4 or 5 weeks, and then we might run into a melt-up state like we happened in Japan. I've done a lot of research on this over the last few weeks, and when this S&P does decide to fall and goes back to fair value, it won't stop at fair value. It'll go 1 standard deviation below at least, which is 1200. So I'm looking over the next sort of 9 to 15 months that this S&P could run into serious crash. We saw what happened with Bitcoin when that fell in 2 weeks from almost 5,000 to 3,000, and then rally back to 4,000 again in the space of a couple of days. And this thing, which is just incredible. Okay, so how high can this S&P go? So as I said, I'm trying to compare this to Japan in 1989. Now these numbers are true. They're hard to believe sometimes when you look at the screen. But in December 1998, the Nikkei broke its second standard deviation of 28,000, and then rallied over the next 13 months to 39,000, which was between the third and fourth standard deviation at the time. This is the kicker. 8 months later, the Nikkei fell from 39,000 to 20,000 to 20,000, 23,000 in just 8 months. One of the biggest sell-offs. I don't know if many of you were trading the dot-com bubble. Comparison probably be the Nasdaq, when the Nasdaq lost 80% of its value after the Y2K, which is 2000, when we ended just a few short months. So if we're in the same situation, the S&P, then the top of the market should be somewhere between October and January of this year. That's based on the Nikkei. My fear is that we could have one more melt-up before the market crashes, and this melt-up could be huge, as shown above. What will tell us that we have a top in the market? And this is why I'm so scared to be short, except on an intraday basis. The 100-day moving average for the S&P is roughly 2440. The 200-day is 2390. The June low was 2403. The July low was 05, and the August low was 17. So as you can see, we have massive support between 2390 and 2440, and it will take a break and close below here for me to say that we have a proper top in the market. We have not had, I look for sell extremes. We haven't had sell extremes that have lasted for more than a few days. I know we've had a few wobbles where the market's fallen a couple of percent, but obviously the higher you go, a couple of percent is going to be a lot bigger in points terms. So, which can distort everything. You think you're having a bigger move than you actually are. So for me to get bearish, we need to break this 2390 to 2440 level, and when we break that, then we're back below the 200-day moving average. And it's interesting, I know we've been watching over the last while, since Apple launched their iPhone 8, the share price is trading at 165. It's now down at closed last night at 156. So Apple is certainly putting a brake on the market, and this move at the moment is not sustainable. So I personally think if we do get a sell-off, which I envisage we're going to get over the next few days or the next 2 weeks, that the market will stop somewhere between this 23.90 and 24.40 initially. The great thing about big supports is if you know where the supports are, you can buy in front of the support. It's like an elastic band. The first time you test the support, you tend to get a 15 to 20 point rally off it. Second time you might get 10, and then the third time you're dicing, and you'll probably break it or just have a small rally from it, and then eventually break through. So that's the way I found, and I trade with gap trading, which I'm going to explain as we go further through the presentation. Okay, this screenshot was written in May when I was doing the presentation. I think just this particular screen or this particular slide. So it's only been 11 days in the previous 6,900 trading sessions, almost 28 years, and the VIX has closed below 10. Last May we had 2 closes below 10, and the market put in a temporary top before selling off. Last night the VIX closed at 978. So this has been the 12th time that we've had this close below 10. And as you've seen with the VIX kind of, it trades 10, 11, 9.5, 10, just bounced around there, very little volatility, and then suddenly there's an explosion. The S&P falls 30 points and the VIX goes up to 17 or 18. Everyone gets all scared, and then the central banks intervene again, and then the market comes back to the status quo. So when you see a low VIX, the complacency out there is just unbelievable, and again, it's not sustainable. And we also have the equinox, the autumn equinox is tomorrow. A lot of people mightn't be into the moon and the sun and the whole conversion between the two of them, but having been in Florida myself on the 21st of August for the partial eclipse of the moon and the sun, we only had a partial one where we were. It was scary, it was eerie, and look what's happened in the intervening 3 weeks. We've had 4 major hurricanes, of which 3 have made land. We've had a couple of earthquakes, we've had the forest fires out the west of the state. So I'm not saying that tomorrow is going to be a day we're going to put in a top. It will be ironic if we do see a top either today, tomorrow, or Monday around this equinox period. Okay, each time the market has been hit hard within days or weeks of this momentous event when the VIX closes below 10, and complacency is the team. And in my view, this will end in tears, but that doesn't mean we're not going to have a melt up first. The other thing that you got to remember, and this is an alleged comment, the Swiss National Bank have $80 billion. That's $80 billion for a population of 8 million invested in the US stock market. Allegedly, they are the biggest shareholder in Facebook. So when you have central banks intervening and buying the markets to that extent, it's very hard to see where the selling is going to come. And this is what's also, moved this market up, because no matter what's happened, whether we've had a missile attack out of or launch out of North Korea over Japan, the market sells off for a few minutes, it goes up. Any terrorist attack in Europe, tragic event that's happened, again the market just regroups and goes on and continues on. So the PEs are at all-time highs. The book value is price to book value is at all-time highs. So it doesn't matter what happens, the market just still keeps going. Even yesterday when the Fed has said they're going to finally start reducing the balance sheet, the S&P sold off to 94.25 and then straight back up to 07, 08 again on 25. Okay, since 1945 the Fed have started rate hiking cycle 13 times. 10 of these have ended in a recession, and my bet is that this one will also end in recession. Number 14 started on December 15. We've had 3 hikes so far, and already money supply is contracting. Yellen's been very clever. She's promised rate hikes without actually doing it. After yesterday's FOMC statement and our press conference, she probably has to do one by year end. But I think the effects of these 2 hurricanes, I know because I was affected by Irma myself, the effects of Irma and Harvey are just going to be huge. We're already seeing it in the weekly jobless, and everything's got any sort of slowdown is going to be attributed to the hurricane. But I think the effects of these are a lot bigger than the press are given heed to. For example, where I am in Florida, electricity only came back last night. You can imagine now being without electricity and power and water for the last 10 days in 90 degrees of heat. it's not a very enjoyable experience. So what I'm saying, this cycle 14 will definitely end in another recession. Growth has been so small considering the amount of QE they put in, and when they start reducing this QE in October, I've no doubt we'll see another QE when things start to slow down again. And from my point of view, I just think Yellen is trying to get to February to get out without any crash on her watch and then pass the buck on to somebody else. And I must say, I think she's done well to avoid, because I think Bernanke gave her a nice hospital pass, so she's, as I say in rugby, so she's taken it well, and she hopes to do the same onto whoever the next governor is going to be. Okay, the five-handle rule is a brilliant concept to play, especially in a bear market. I know I'm showing bullish prices here, but for example, if we do have a 20 handle sell-off or 20 points, handle is a point, just to explain that. So if the S&P goes, say, from 2500 to 2480, or as we're looking at my example, we're looking at the top side, so you go short at 2500 and you have a stop at 2506, which is stopped, and the market subsequently makes a new high at 2512 before selling off. Then if the market drops 5 handles from that 12 high, or whatever your high is, which in other words is 07 as shown on the slide, then you'll go short again once more with a stop above whatever the previous high was, in this case 2512 and a quarter. So many times this five-handle rule works, especially on the buy side. So for example, if the S&P were to fall 20 or 25 handles over the coming days, and suddenly you see a bounce of 5 handles, buy it once. So if we fall, and the other thing as well about the S&P is gaps. All gaps in the S&P get filled. From Hurricane Irma, which didn't cause as much damage as expected when Miami was avoided, the S&P gapped up in the December contract from 2461 to 2473, and then just went up in a slow fashion since then, and basically has just stopped over the last week. But this gap from 2461 to 2473 will be filled. It's just a question of when. Again, going back to my elastic band theory with the 100-day and 200-day supports, if the S&P goes back down to this 2461, the first time of asking, you can be a comfortable buyer at 64.65 with a 6 or 7 handle stop, and you should be able to get a 15 handle rally out of it. It works really well in bear markets. It's why in bear markets, 8 days out of 10, incredibly, the market goes up. It's the other 2 days that you need to worry about. And this five-handle rule when I'm playing, or the gap trade when I'm playing. Sorry, no, the gap. I'll explain the gap on the next one. Sorry. Okay, so we see here on the chart as well. The other thing that my blog is great. It says you're doing a lot of work, and I base a lot of my calls on Bollinger Bands, mainly on the daily chart. I don't trade the 1 minute chart because you've got to be at your screen all the time. The only downside from my system is some of the orders might get hit at 9 o'clock at night, and they are valid until my next update. So, for example, if you have a buy level in the S&P and well below the market, and there's a missile launch out of Korea, many times the market has hit my price and then rallied out of it by the time you wake up the next morning. So you have to trust the system. But as you can see here in Bollinger Bands, every time we get to the bottom of the Bollinger Band, there's a huge rally back up again. It works constantly. You can see it there in the chart going back every single time. We just get all these. It doesn't work as well on the top side. As we can see here, we topped at 2480. We've been at the top of the band, and we just expanded, and the band has gone higher. So it's not as relevant on the top side as it is on the bottom. But on the bottom side, it really works well. And if you use my best signal for buying the S&P is if you use this in conjunction with the McClellan oscillator. Now, I'm not sure if you know about the McClellan oscillator. The McClellan oscillator basically measures the internal reading of the market. It's an index that goes from minus 250, which is oversold, to plus 250 when we're overbought. When the S&P recently traded back down to 2430, and everyone looked like it was going to break again, we got down to a low of 2421, which is the 100-day moving average at the time back in the 21st of August. The McClellan oscillator was trading at minus 247. So that was telling you, do not be short this market. And I wish I'd believed it fully myself, because then we saw a quick, easy 60 handle rally off that 100-day moving average. So to find out the McClellan oscillator might only work 3 or 4 times a year. It works fantastic in bear markets. I've back tested this over the last 10 years. It's just been fantastic. So every time you're outside the Bollinger Band or at the bottom of the Bollinger Band. The McLellan oscillator is close to -250, and the Williams index, which is the percent to R, and that goes from 0 to -100, and that's at -100. You can literally close your eyes, put a 20-handle stop in, and just let the thing run. It works constantly. Okay, here's the Dow. So as we've seen, the Dow has just gone up and up and up and up. I just want to read what I wrote this morning on the Dow here, so I don't check myself. Okay, this is in today's commentary that I wrote. It said, sentiment remains at extreme levels for US stocks, with the market feigns bullish consensus at 71%, which is the highest percentage of stock market bulls since June the 5th, 2007, when the financials peaked and started an 85% crash to March 09. Meanwhile, the Dow is now closed higher for 9 straight days and 10 of the past 11. The 9 consecutive closes is the longest streak since the 10 straight closes that ended on August the 7th. The intraday high was made the next day, and this is followed by a 580-point fall in the Dow to the low on August the 21st. Another hint that we may finally start to see a correction is the McLellan oscillator, which fell again yesterday to close at a still positive 87. This should not be happening if this is a healthy market, while the Nasdaq continues to struggle since Apple launched its iPhone 8 last week. When the US market, that's just what positions I'm doing myself. So there's a minor trend line in the Dow at 22,460. I will be a seller into that with a 565.70 stop on the Dow. I just think that 9 days, if we do go up today, it'll be the 10th day, and history would tell you it's very rare. I mean, I think I've only twice before, once in August, seen a 10-day streak, which is not sustainable. The other thing that I follow a lot is the fear and greed index. But the fear and greed index, when we get below 20, we're oversold. We get over 80, we're overbought. Again, when the S&P got down to that 24-21 on the 21st of August, the fear index was down below 20, showing fear. Now we're trading at 81, which is extreme greed, not sustainable. Coupled with the equinox tomorrow, there's a fair chance that this Dow is just this rally is not sustainable, in my opinion, from here. Now go back to my first chart when I was talking about our first slide, and I was talking about how high can the S&P go. I still believe we'll get a good correction down to this support, which will probably be it for this year. And then traditionally this October to April timeframe or the end of October is the bullish part of the cycle. You wouldn't think it from September given all the updates, but then I think we'll have one more melt up in the US stock market before this whole thing comes crashing down. Okay, we can ask questions. You can go back to me and ask questions at the end on the stock markets. I just want to talk about the dollar index. Dollar index low last week was 90.50. We got down to just below 91 last night initially after the FOMC rate announcement, when there was no change. This is crucial for a lot of the asset classes. As we saw with sterling, but once Brexit happened in the UK, the one market you would not be short of is the FTSE. The FTSE has just gone up and up and up until sterling started to turn. Once sterling started to rally, the FTSE has been very heavy, as we've seen over the last 2 weeks. So these currencies are having a massive effect on what the stock indices are doing at the moment. And this dollar, if dollar breaks this 90.50, then I think we could be in for this melt up in the US stock markets that I've been talking about. Remember, I am not bullish at the moment, and I'm not bullish long term. I just think most markets tend to end with a huge flurry that nobody believes. As Keynes famously said, markets remain illogical longer than I remain solvent, and then the thing will eventually crash. But if the dollar index can break this 90.50 area, it's key. A break and close below here could well see a move into the mid-80s. And implications for a new selling of the dollar, well, corporate profits of large multinational companies will rise, and this will help the Dow big time. And emerging and developed international markets will also continue to outperform for the foreseeable future, while commodity prices will also rise. I'll just touch on gold and silver. I'm a huge bull of silver. I'm not at the moment. An index that I watch is the daily sentiment index. When that gets above 80, the market is overbought. When it gets down into single digits, then you can really start to buy the likes of gold and silver. Silver topped at, when we got up to a price there of 18.30, the DSI was up at 80. It's fallen maybe to around 50 at the moment. Silver's had a good sell-off today, down to 16.80. I think if silver can get down into the low 16s, the DSI should be in single digits at that stage. And then we should see a really good run in silver. Silver has massive support at 15.90 to 16.10. Just can't see that level being broke. The other thing that I've been very bullish of is gold, up until recently. And again, I look at a lot of these surveys. You'd be surprised how accurate they can be. And when gold was trading at 13.30 the other day, make that sure I've got the right. Yeah, when gold was trading at that 13.30, the commitment of traders report came out late on Tuesday night, showing that the people were still 65 to 70% bullish of gold. It just was not sustainable, and I think the real support for gold is down here at 12.75 to 12.83. We hit a low at 12.87 so far today. I think gold will get into that buy level. It's a buy for $10 or $15, and then the real support for gold doesn't come in until 12.50. So just something to keep an eye on for those two markets. I'm sorry to deviate on those, but I think they are important going forward. Okay, the other thing, going back to the US stock market, is the Hindenburg Omen. Again, Hindenburg Omen, you can take a screenshot of that, or when Simon sends it out later on, you'll have what constitutes a Hindenburg Omen. So basically, a Hindenburg Omen is an alignment of several technical indicators that measure the underlying condition of the stock market. It relates specifically to the New York Stock Exchange and is a very good signal that the probability of a stock market crash is higher than normal. You must have two Hindenburg Omens within a 30-day period to have a confirmed Hindenburg Omen. From June to September 2017, we've had 9 of these, and this signal is now valid until January 2018. I have never seen 9 Hindenburg Omens before. And the reason I mentioned the Hindenburg Omen, the one key element of the Hindenburg Omen is the McLennan oscillator. To get a Hindenburg Omen, you have to have the McLennan oscillator in negative territory while the stock market is still going up, and that's the key. Again, if these are the conditions for the Hindenburg Omen. So new highs, and the New York Stock Exchange was great at new lows. So forget about all these. The key is the McLennan oscillator must be negative. So a lot of times you see the MO negative, and you're seeing the 50-day moving average on the New York Stock Exchange is higher than it was 10 weeks ago, and that happens so many times. And the first thing I do in the morning when I go on the computer, I don't check where the markets are. I check with the McLennan oscillator. It comes out around 4 or 5 a.m. London time, and that's why you often see these spikes in the market before you wake up, which have happened overnight, and a lot of it's to do where the MO has closed. It's just an incredible technical indicator that so few people know about. Okay, going back to the euro. Euro, as you can see, we have a double top here from yesterday at 120.35, and then triple top 120.70 and 120.92. They've all been made in the last few weeks. I think the euro, as long as we can hold this 117.50 to 118, I certainly wouldn't be short. I still think the euro is going to have a run back to 130 over the coming months. And the reason I'm pointing that, I think the US are not going to hike the rates as much as they're saying. Yes, we'll get one more rate hike by year end. I don't think we're going to get the 3 rate hikes that Yellen is saying that we're going to get next year, because I don't think the growth is there to justify that. Meanwhile, the Bundesbank are delighted with the move in the euro. They did not want a weak euro under any circumstance. So we've had a lovely run up from 103.80. Plus, if you go back to January, February, which I couldn't understand why people and analysts were all talking the euro down. Trump came out and said that the dollar has to weaken. Merkel came out and said the dollar had to weaken. And lo and behold, the dollar does weaken. So when you've got the two main leaders calling for a weaker currency, it tends to happen. So I think, on a break of this 121 area, and there's no reason why this euro can't go up to test 122 initially, then 125, and then ultimately back to 130, which is where we were before this whole sell-off back down to 103.80 back in January. I will now take some questions. I'm sure you have a lot of questions to go, so you probably.
Brian, thank you for that. Well, yeah, Kim's just actually posted a question. She says, do you see the melt-up of the S&P 2620, 2650 targets by the year-end dependent on the damage in September, October?
Yeah, I mean, it depends how low we get. Keep an eye, that CNN, that greed and fear index is just unbelievable. So if that gets down below 20, and we see the McLennan oscillator go down to minus 250, we could just have a massive move here, because as you know, the fund managers always try to ramp up the market as high as they can, and it's so hard to be short when I tell you that story about the Swiss National Bank. I mean, many other central banks, what money have they got invested in the market? So this melt up, and we always get a melt up to finish off a big rally, but you saw with Japan, we got to 39,000, and then 8-9 months later, here we were trading nearly half price. So I think the sell-off, as you saw, Bitcoin is going to be unbelievable when it comes. Personally, I don't own one stock. I think that when we had that sell-off to the 21st of August, credibly 40% of the S&P stocks were 10% off their highs, which is just unbelievable. So, and as we've seen over the last couple of days, the S&P has gone up, but the volume has fallen. So normally volume follows price. It's not. So we're seeing, and it's interesting. Yesterday, in the 20 minutes after the FOMC statement was released, the S&P went from 06 down to that 94 and a quarter that I mentioned, and the volume increased hugely. And then when the market turned around again, there's very little volume. So you got to keep an eye on that as well. The beauty of the system that I do, it's not, you don't have to be at your desk. I do the work for you. You just what the guys do is when I write the commentary, it can be anywhere between 1,500 and 2,000 words, because the first part is the daily commentary, just what happened yesterday. But the actual 9 markets that I cover, it takes about 10 minutes to read them, and then the guys just input the positions or the orders into their system, and then they wait till they get hit for the updated emails from me, which is not huge. It might be 3 or 4 in a day. If it's a quiet day like yesterday and today, it'll be only 1 or 2.
How are you trading, Brian? What sort of instruments do you use? Are you using CFDs or?
No, I just basically do the futures market. So I would trade the 9 markets that I cover are the S&P, the Euro dollar, the dollar index, which is the dollar basket I have up in front here, the DAX, the FTSE, the Dow, the German Bund, gold, and silver. So it's quite a broad base. So you hope that's one of the asset classes, if it goes quiet on one class, that it's busy on one of the others. So that's the whole idea of it.
What kind of time frame typically?
It's all short term. So it's all trying to get as many points on a daily basis for everybody. So my commentary, if I'm in the States, which I tend to spend 3 months of the year, the commentary is out when you wake up in the morning. If I'm here in Ireland, the commentary is emailed to you before 9 each day, and then the updates will be sent as the positions or the calls get hit during the day. So if 3 or 4 calls get hit together, I'm going to be straight on with an email to reduce the risk. So obviously we don't want to have more than 3 or 4 open positions at the one time. So that's kind of, so some guys might trade the Dow, other guys might trade the S&P, some will trade both. I have a lot of hedge funds on the system, so that's why I got to do things like the DAX, which, as you know, is just an insane market and moves on nothing. So yeah, that's why I have to. The hedge funds want to trade that. They want the volatility.
Sure. Question from Richard. Hi, Richard. Is not a falling US dollar and the actions of the Fed to prop up the markets making shorting the US indices a fool's errand? Without a firm lower end and a break of a lower low, i.e. an established short trend forming. Do you want me to repeat that? No,
that's fine. What I'm saying there today, I am bullish of the stock market. I think until we take out this 2390, 2440 area, you got to be a buyer on dips. But I just think I would certainly not. I don't really want to be buying up here at 25 10. Like for example, my buy level today in the S&P is 24.82 to 24.88. Again, just looking for 5 or 6 points. So I'm still a buyer within these levels. I will be an aggressive buyer into that gap that I mentioned, that 24 open gap, that 24.61 to 24.73. I still think we'll get a melt up, but I just considering how frothy we are with the 9 straight days up on the Dow, we are due a correction, and that's why you pick your levels. If you're wrong, at least my stop is tight.
Yeah. Sure, thank you.
And amazing times. If you actually follow my blog Without Emotion, it just makes money every month. So the trick here, having traded on my own, in a room on my own, having traded on a floor with 150 mad traders down in Finex, I know what everybody goes through. I've been through all those emotions myself, but I think I've cracked on the system that if you follow this without emotion, and of course it gets hairy at times, you could have 3 or 4 or 5 positions hit at the same time, but if you follow it without emotion, you will make money.
That's the trick. We are emotional beings at the end of the day.
Exactly. You have to trust it. So
leave your emotions at the door, and you'll be out.
Exactly. That's why I do mine on the rugby pitch. So I'd be as competitive as the next person. So the other thing about the blog is, if I have a bad day, I'll keep pushing to try and get the points back. So I won't stop. I won't hide. So I'll come up with other ideas if we do have a bad run, which is important.
Someone on your side. Great.
There's no hiding. So which is important.
Auntie says, are you able to please elaborate on your gap trades strategy?
Yeah, the other thing is, sorry, I meant to say that, Angie. The gap, for example, if the S&P, let's go back here to the S&P. Okay, so if the S&P, say for example, it only works on the downside, doesn't work on the upside in my experience. I don't sell the gaps, I only buy the gaps. So particularly in a bear market. So if, for example, the S&P closed today at 25.06, and for some reason overnight something happens, some news comes out, and we're trading at 24.92 in the morning when you wake up, I would buy the S&P with a 5-point stop or 6-point stop, looking for this gap to be closed. The gap basically runs from Chicago closed at 9:15, so 9:15 London time tonight. The S&P closed at 25.06. It reopens at 2:30 tomorrow London time. So if we opened at 24.92 or 24.93, there's a 12 or 13 or 14 handle gap between the Chicago close last night and today's opening. I would buy the market looking for this gap to close. Then it becomes a game of chicken. Do you try and get the whole gap to close, or do you just take your 6 or 7 points, be done with it, and then wait for the trade to come back again the next day? That's what I tend to do. It's incredibly how many times these gaps close, especially in a bear market. Everyone gets short. As one friend of mine says, don't short in the hole, because if you're set on the hole, you're just going to get swamped. So you have to pick your moments. And all the trades that I write on my commentary, they just work once unless I state otherwise.
Thanks, Brian. Okay, questions come in, which is great. Kim says, you have started using Pelican. Yeah, of course, we'll mention Pelican, the Pelican group later. Kim says, you've started using Pelican. Do your daily trade positions match that, or are they more swing?
No, they match it. The way what I'm doing with Pelican is obviously they're perfecting the app, and we're trying to get everything lined up correctly. So, for example, if I have a buy level today, the S&P from 82 to 88, and their stake size, for example, say is €5, they do 250 at the first buy level and 2 at the last buy level, and nothing in the middle. So if both sides get hit, then you're long at the mid price with a stop 5 handles below whatever the last level is. So that's how the strategy is. So we do 50% of the stake size. For example, today so far the only trade to hit was silver at a buy level in silver at 16.85. So that got hit, and then before I came on to this webinar, silver was trading back at 17. So I just emailed the guys to get out because I wasn't going to be watching the market for the hour and a half. So it's pretty much hands-on. Don't be afraid to take your 10 or 15 points, and you'll be surprised how much they add up on a monthly basis.
little bits, of course. One final point, and then perhaps we could go across to Peter to talk about the Pelican Group. Marguerite is asking about your stops. What kind of stop levels do you normally?
Well, again, we go with the we might as well go with the S&P. So today my buy level, as I said, was 82 to 88, and my stop was 77. My sell level in the S&P is 25.14. It's a wider sell because of we don't know where this thing is going to top. So I mean, I'm selling a much smaller size than I'm buying. My sell level is quite wide. It's 25.14 to 23. So again, I do half the stake at 14, half at 23. So if both sides get filled, then you're short at 18, 19 with a 28 stop. So it's quite tight. I don't write these commentaries where you have a 150 point stop in the euro, because that doesn't work for anybody. For example, my euro buy level is way below the market, 117.35 to 117.80, and my stop is 116.90 on it. So it's quite tight stops. My take profits will be shorter than my stops, but 85% of the trades tend to work. So that's kind of where we're at.
Correct. Bryan, we've got just about 10 minutes left on the clock. Do you want to go through more of the presentation, or I know Peter's here to.
No, Peter's happy to come in. That's no problem. I think I've given everybody a base. My views is they'll when they get the presentation up from you, they can. The slides are fairly well detailed, so they can keep a record of it. I think it's just insane to think that this S&P could go up to over 2,700, but we got to bear in mind the only comparison we have is Japan. And the amazing thing with Japan is, despite when we topped at 39,089, here we are in 2017, and the market is still at 20,000. So it hasn't gone anywhere near going back to where it was. So this could have major repercussions as we go forward. Of course, nobody knows where the top is, and I'm fed up reading the analysts saying, yes, we're going to top today, we're going to top today, we're going to top, and these bears have just been absolutely killed, absolutely killed. So I know they'll make money at some stage, but inevitably they'll probably be long when this market does sell off. It's just the way human nature is.
There's a lot of noise. MP is asking, where can we see reports from Bryan? Do you offer reports? I think you're talking about maybe about the daily blog.
Yeah, basically my subscription, it's a paid subscription. It takes me 2.5 hours to write this every morning, and then we do the updates during the day. I'll let Peter explain in a second, but I have a free trial, which is €10 for a week. And then the basic service with no updated emails or stops or sorry, take profits is €45, which is the basic report. And then my platinum service is 185. I've teamed up with Pelican, and what we are doing at the moment, it's £150 to have all your trades done for you and get a text message to see if you want to do the trades until it goes fully auto by the end of the year. And for the first month, we're offering that at half price, so £75 to do that. Peter will explain where you can download the app for that.
Great. I've just posted your website in the chat box there, tradernoble.com. People can go there. Let's bring Peter Watson back into the webinar today. Peter, are you there?
Yes, Simon. Hello.
Oh, hi there. Hi again. Welcome back. Good to have you back. Just Bryan's mentioned we're getting quite a few questions.
Hi, Peter.
Hi there, Bryan. How are you? I think apologies. I'm in a fairly noisy office, and there's nowhere really quiet to go right now.
Peter, you're in the pub.
Perhaps I'd rather be there. Definitely not. I'm drinking absolutely an extremely soft drink. So I think all that Bryan and you, Simon, have said is broadly correct about the Pelican service. I think what we could do is perhaps the code. So at the moment, the group operating is called Trader Noble. To get to it, you have to, it's a very, very simple process. You just have to download the app. You go straight to tap activity, then discover. You see that the group will come straight up. well, there'll be a list of groups, and you'll be able to see Trader Noble on that list. Now, when you tap on Trader Noble, you will be given the option to join. You press join, and you'll be given the option to put in a voucher code. Now, that voucher code is TC699N, and what I'll try and do is post that in the question box quickly. I think that should work.
No, Peter, I've just posted that already. Voucher code TC69NN.
Yeah, I'll just put it in there. Hold on a minute. Well, doesn't seem to work. How do I send a question?
You can't send a question at the moment because you're not.
Sorry.
I think I've done it on your behalf though. The voucher code TC69NN.
No. So TC699N for November.
Okay.
Just one N at the end. In any case, if you're interested in joining Bryan's service, don't hesitate to contact the support at Pelican. We check it, so support at pelicantrading.io, and we'll get back to you literally within the hour or two about Bryan's service. So just to give people an idea of how it works. So what you do once you're in the group, you will see every morning as soon as Bryan's commentary comes through, the team here will
Slides.
post pending orders.
Should we go across to your computer? We're not looking at your slides at the moment, so.
I haven't got any specific slides on this. I'm sort of just running through what's on the group. Apologies. I think
the other thing to do, Peter, if they email me directly, I have the voucher code. I can send them the email with the voucher, and they can just download directly, which might be quicker. I can send you the link. So it's Bryan at tradernoble.com. It's BRYAN at tradernoble.com. So if you just email me, I'll send you the voucher, and I'll send you a copy of today's commentary, so at least you'll have an idea of what it is, and then you'll have the voucher as well.
Yeah, exactly. So the group since it started has been incredibly popular, and at £75 for the first month is extremely good value introduction to it. So when you're in the group, and Pelican is different to other brokers in that you can see the trades being posted on a WhatsApp style wall. So you will get, as soon as Bryan's commentary comes out in the morning, shortly afterwards you'll get a string of orders coming through on the wall with the exact parameters that Bryan has set. Now, it doesn't matter whether you might be an expert trader and know exactly what's going on. You might be somebody who knows very, very little. You can still copy that trade, and you'll be doing exactly the same trade as Bryan has instructed. So that's the beauty of it. It enables you to get the morning commentary as part of this deal, which in its own right is a well-established service. In addition, you get what's on the wall at Pelican. You can copy the trade, the order. Then, as part of the Platinum service, of course, you get some extra emails coming to you during the day. These I will act on ASAP. So then that normally involves closing an open position or editing an existing order as Bryan's views and aims change during the day relating to market conditions. So, in addition to this, I would say that on the wall you can chat with other traders, and I mean the group's only been going in sort of full anger since the beginning of this month, really. We had a very, very strong August. We had a more difficult September, but things are getting back to normality now with a steady flow of profits. And the lovely thing about the app is you can chat with other traders, chat with your friends on the wall about the trading. There's no one definitive way to use Bryan's service. I mean, I think we do all the trades, every single one, including the dollar index, all the 9 instruments, which you've heard Bryan talking about. Some traders choose, and I recommend to start with, they just do 3 or 4 instruments at low stakes to start with, or even on a demo account before you go live, and then you get an idea of how it works, rather than just going in on something new without fully understanding it. So it's taking it slowly, getting it going, and you know, Bryan's service has been profitable for years. You know, we're wanting to create long-term profits very much for the users of it. So as I say, hopefully you've got all the details to contact Bryan or here at Pelican to get signed up. And I know that both of us, I'm sure, would be happy to have a chat with anyone who's got further questions.
We would do. As always, you can include my contact details in that, Peter, and anybody that's trying to get in touch with anybody that's been appearing on Round the Clock Trader, I can act as a point of contact. One question from Julia, Peter, probably better for you. Do you have to pay individually for the advice of the individual people advising on Pelican, or is it all included in one price?
Good question there. So currently it's totally individual. So the mentors themselves, and there are only probably half a dozen paid for groups that are fully operational at the moment. The individual mentors set the price. That may be £50 a month. It may, some people are trying to charge a lot more than that, but it's yeah, so this is individual. There is a business model that we thought about in terms of having a flat fee to access all the groups, but that's not one we've acted on. We're acting individually for professional traders like Bryan.
There are free groups on there though as well, of course, aren't there? There are groups that you can go on and follow, talking about various, you know, you might find a group that's specialising in chatting about the FTSE or something. Is that right? Some of them are free.
Yeah, correct. So you've got a selection of free groups. These tend to be, for obvious reasons, the less serious traders. You're not going to get a serious trader willing to give all his information away for free. But there's the opportunity on Pelican to get lots of useful free information, as well as set up your own private group with friends if you so wish. But really, what Pelican is all about is about services like Bryan and giving the retail trade access to professional information, to the experience that Bryan has.
Sorry, if I can just say one thing there. The really one good thing about my service is if you join up to my group on Pelican, you go on my email list. So you get an email, when I send out the email to everybody, you get a copy straight away. So there's no delay in it. So you're not going to Pelican and then waiting for them to send it on to you. Actually, you're on my list every morning, so you get all the emails and all the updates. And just one other thing, for what a lot of my members do is they have a separate email address for me. So for the 3 or 4 emails that I would send on a daily basis, they can react to it quickly if they want to do the trades themselves, as opposed to going into their normal email inbox.
Super, that's absolutely correct. Yeah, I thought I'd just quickly, one last thing I forgot to mention is that, and Bryan did mention this earlier, is that currently it's kind of semi-auto copy at the moment. So we're using the feed we have from Intertrader to set up live accounts, and as I say, you can copy the first order. If there's any editing or closing of trades, you will get a notification, an out-of-app notification to your phone, and you will then have to go in yourself and change that trade. Now, what is coming in the future is going to be a full managed account auto copy service, where you will have the option to possibly plug in an MT4 account. Probably to start with, it will only be Intertrader, but perhaps in the future you could plug in other broker accounts, and it will give a full managed account service. And you decide the amount of funds you want to deposit, and it will be proportionally traded as per the staking plan that we're currently using. And just a quick thing about the staking plan. So currently we're doing £2 a point on everything, apart from the FTSE, which we're doing at £4 a point, and the S&P at 15. Now, another thing I'd mention is when you do copy a trade, you're not stuck to those. You don't have to play the market at no stakes. You can alter the stakes to your own account size and risk management profile. So yeah, I think that pretty much the basics of it. And I say, any further questions, fire away.
Fantastic. Peter Watson from Pelican Trading, thank you. I think we'll need to wrap up there. We're a couple of minutes from 6 and we have our next speaker lining up. So as always, don't hesitate to contact any of the speakers or through myself if you need that. Just drop me an email, say, Simon, who was that speaking about such and such? I'll be able to know who it is and forward your emails. Great. Bryan Noble from Trader Noble, thank you very much, and thank you for resolving the technical issues. I think that went very smoothly. You've become a webinar professional.
Expert. Thank you, Simon. Thank you everybody for listening to me, and hope you enjoyed the presentation.